Welcome back to Thrifty Finance Vision PH. We're excited to have you here for our latest corporate updates, and we'll be bringing you more insightful content in the days to come. Stay tuned for a wealth of valuable information about the world of finance and business. Your journey to financial empowerment starts here. Now let's get started. Clark Development Corporation is actively looking to draw more electric vehicle (EV) businesses to its area. Clark Development Corporation is actively seeking to attract more electric vehicle manufacturers to the Clark-Freeport zone, according to CDC President and Chief Executive Officer Agnes VST Devanatara. Currently, there is one American EV company operating within the zone, but CDC is eager to see more join. CDC has available space, and EV manufacturers typically do not require large areas for their operations, making the location suitable for manufacturing and information technology investments that demand smaller areas. Devanatara mentioned that some foreign investors have shown interest in investing in the Freeport, though they are evaluating the policies in place. Moreover, Filipino investors in the EV industry have also expressed interest in establishing operations in Clark. Envirotech Vehicles Incorporated, a U.S.-based EV manufacturer, signed a lease agreement with Berthapil Incorporated, a real estate developer in the Freeport, to establish a plant in the zone earlier this year. Envirotech aims to commence operations in its assembly plant in Clark in the same year. The existing facilities in Clark are available for locators, allowing them to start operations without significant delays. These facilities were previously used by companies that closed during the pandemic. Envirotech's site in Clark is not large, further highlighting the appeal of the location for EV manufacturers that do not require extensive facilities. Meralco is inviting potential suppliers for a 1,800 megawatt power supply. Meralco, the Manila Electric Company, has initiated the search for potential suppliers to provide 1,800 megawatts of electricity in response to the increasing demand from its customers. The power distribution company made this announcement on Thursday, stating that they are inviting power generation companies interested in participating in the competitive selection process through their Bids and Awards Committee for Power Supply Agreements. The deadline for expressing interest is November 13th, with a bidders meeting scheduled for November 20th, and the final bid submission deadline on December 26th. This competitive selection process is aimed at identifying new electricity suppliers to replace Excellent Energy Resources Incorporated and Masinloc Power Partners Company Limited, whose contracts with Meralco were terminated earlier this year. These two companies, both part of the San Miguel Group, were initially contracted to provide the required capacity for Meralco in 2024 and 2025 after winning supply contracts in 2021. The Energy Regulatory Commission approved the withdrawal of the power supply agreement application jointly filed by Meralco and San Miguel last month. In March, San Miguel had submitted notices for the termination of the PSAs, effective April 1st. It's worth noting that Meralco's controlling stakeholder, Beacon Electric Asset Holdings Incorporated, is partially owned by PLDT Incorporated and Hastings Holdings Incorporated, a unit of PLDT Beneficial Trust Fund subsidiary MediaQuest Holdings Incorporated, has an interest in business world through the Philippine Star Group, which it controls. Cebu Pacific will maintain its environmental initiatives even in the absence of a net zero target in the Philippine Energy Plan. Cebu Pacific is planning to maintain its climate strategies even though the next Philippine Energy Plan doesn't include a specific net zero emissions target, according to the company's president. Alexander G. Lau, President and Chief Commercial Officer of Cebu Pacific, stated that the aviation industry is global and follows international standards, so they are committed to adhering to those guidelines, even if the Department of Energy hasn't set a specific target. Cebu Pacific is pledged to help the aviation sector achieve net zero greenhouse gas emissions by 2050. The aviation industry, responsible for approximately 2 to 3% of global energy-related carbon emissions last year, is growing faster in emissions compared to rail, road, or shipping sectors, as per data from the International Energy Agency. Cebu Pacific is also monitoring CORSIA, Carbon Offsetting and Reduction Scheme for International Aviation, and is looking forward to evolving regulations. They are keen on government support for sustainable aviation fuel, SAF, and aim to integrate SAF into their commercial network by 2030. The company is also working on establishing long-term supply agreements with green fuel suppliers. The Department of Energy is expected to release a new Philippine energy plan covering up to 2050, as the current plan only extends to 2040. While the Energy Department hasn't committed to a net zero emissions target, they are focusing on the rapid deployment of emerging clean technologies instead. Net zero refers to minimizing greenhouse gas emissions as much as possible and offsetting any remaining emissions in the atmosphere. The World Bank has reorganized the loans related to the Philippines' COVID-19 response. The World Bank has restructured and extended the deadline for a loan related to the COVID Emergency Response Project in the Philippines until the following year. According to a document from the World Bank, the closing date for the original and first additional financing agreement for the project has been moved. The World Bank has now set December 29, 2024 as the new closing date, whereas it was originally scheduled for December 29, 2023. In addition to extending the closing date, the World Bank has decided to cancel $14.82 million of the first additional loan, which was initially part of the $500 million secured by the Philippines for the project. Furthermore, the second additional financing loan, totaling $300 million for the project, is also being canceled. This decision by the World Bank to extend the closing date and cancel portions of the financing follows a request made by the Philippine government in a letter dated September 14, 2023. The request sought a restructuring of the project, including an extension of the original and first additional loan agreement's closing date, partial cancellation of the first additional financing, and complete cancellation of the second additional loan. In April 2020, the World Bank approved a $100 million loan to assist the Philippines in addressing the challenges posed by COVID. An additional $500 million loan was approved in March 2021 to strengthen the country's healthcare systems during the pandemic, primarily supporting the procurement and distribution of COVID vaccines. In December 2021, the World Bank approved a second additional financing of $300 million to further support the Philippines' vaccination efforts. Maybank forecasts that the Philippines will achieve a 5.2% GDP growth rate this year. Despite an anticipated slowdown in the next 2 years, the Philippines is predicted to be the fastest-growing economy in the Association of Southeast Asian Nations, ASEAN, according to the Malaysian banking giant Maybank. Maybank forecasts that the Philippines' gross domestic product, GDP, growth may dip to 5.2% this year before rebounding to 6.5% in the following year. In 2022, the Philippine economy accelerated, achieving a 7.6% growth rate after experiencing a 5.7% expansion in 2021. This recovery came after a severe 9.5% contraction in 2020, primarily due to strict COVID quarantine and lockdown measures. Despite the expected slowdown, Maybank believes that the Philippines will outpace its ASEAN neighbors in terms of economic growth. The Philippine economy is projected to have an average growth rate of 4% this year and 4.7% in 2024. These figures surpass the growth rates of Indonesia, 5%, Vietnam, 4.8%, Malaysia, 4%, Thailand, 2.9%, and Singapore, 0.8%, for this year. In the first half of the year, the Philippine economy grew by 5.3%, falling short of the government's target range of 6 to 7%. For 2024, the Philippines is expected to continue outpacing its regional counterparts with a GDP expansion faster than Vietnam, 6%, Indonesia, 5.2%, Malaysia, 4.4%, Thailand, 3.6%, and Singapore, 2.2%. Maybank attributes the brighter economic outlook for 2024 in ASEAN to factors such as strong GDP growth in the United States, increased spending on semiconductors and electric vehicles, as well as a shift in consumer spending towards goods. The bank also notes that the replacement tech cycle, declining U.S. inventories, and stabilizing commodity and chip prices will support ASEAN export growth in 2024. However, Maybank also acknowledges that there are risks to this positive outlook, such as uneven global growth and variations in economic momentum in different regions. Nevertheless, the ASEAN economies are considered resilient due to reduced external debt and robust labor markets. Maybank further notes that inflation has eased to more manageable levels across ASEAN countries, except for the Philippines. we've reached the end of our video, covering the latest economic and corporate updates. Be sure to stay connected with us, because we'll be delivering even more of this valuable content in the days and weeks to come. Your source for up-to-date financial insights and business news is just a click away. I trust you gained valuable insights from this video. Remember to show your support by hitting the like button and subscribing to our channel. We look forward to having you with us in our next video.